Hello everyone, Simon here from the Wells of Wall Street. We've got a really insightful video for you today introducing Kene from Millicent Labs, who we met recently at the Digital Pound Foundation here in London, United Kingdom. We'll be talking about CBDCs, stablecoins, a bit about the regulation and standardization behind those, as well as some topics, interestingly, around Project Rosalind and Millicent Labs interaction with that as well. Loads more on top of that. Let's go straight into this one. It's going to be really cool. Okay, welcome Kenny to the channel. This is absolutely fantastic. Really looking forward to this. It'd be massively appreciated if you could do a bit of an introduction to yourself and of course Millicent Labs as well. And also the work that you've perhaps been doing with the Digital Pound Foundation in recent times as well.
Yeah, my pleasure. Thanks so much for having me on. Big fan of the show. So my background, I come from Canada originally, as you may be able to tell from my accent. After uni, I decided to come travel in Europe and never left. I lived in France for quite a while. I had another company. I sold that on, did an MBA, really started to dive into what is money and how does it flow around the world and what does the plumbing that underlies it look like. And realized that there were some big issues there. And that led us to creating Millicent to try and upgrade the world's money systems, not necessarily redefining the legal instruments themselves, but building better plumbing for those instruments to flow through. And with the Digital Pound Foundation, we're actually just in the process of joining now. There are a lot of trade bodies here in the UK and all around, and you can't join them all. And some are better quality than others. And so we did some work with the DPF before formally joining, and it's been fantastic. Great organization. I think looking into both the public and the private digital pound, really important. I think they strike a really good balance. They do a lot of good work. And I'll give Jan Apache a shout out.
Absolutely.
Policy lead from the DPF. She's doing good things.
Yeah, that's great. I mean, we've had Jan on the channel before. It's absolutely fantastic. And obviously the involvement with that event, just from a listening perspective, is very rewarding from our side for sure, in terms of the information that's coming out, and listening to people like yourself and the most recent ones on that panel is absolutely brilliant. I suppose what we're going to do, Ken, is kind of go through a variation of different topics here in relation to certainly that sort of CBDC topic, stable coins, etc. One of the defining points I wanted to kind of start with really was that obviously I can't remember exact month last year, but you guys got some backing from the UK government in the form of a grant, of course, for the exploration, if you like, for a better word, in the stablecoin and CBDC frameworks. So how is that kind of like integrated with yourselves? Like, can you explain like what was going on to achieve for yourselves as Millicent Labs, but also for the UK in general, of how we're going to basically go into this new form of finance?
Yeah, so quite funny. Our grant monitoring officer used to always joke with us that he couldn't believe that we got funded because the first word in our application was Bitcoin. And he said, I'm surprised they didn't just get chucked straight in the bin when they read the word Bitcoin. But yeah, we were, I think, the first firm to get funding from UK Research and Innovation to work on a digital pound that at the time wasn't even known as the digital pound. We were looking at private and public applications thereof and building new infrastructure. And the grant funding was really instrumental to us. It took Millicent from being an idea on paper to building and moving forward. And we raised some more funding off the back of the grant. We grew the team. We started building, and we started engaging with the FCA's Innovation Hub. And I think it was a really big stamp of approval to get UK government funding behind what at the time people were really looking at Terra Luna and UST as, oh, this is the future of digital money. And you would have thought that a government would run the opposite way, but our view was very different from UST. And that funding from UKRI really is what started us along our paths. And things have really snowballed since then, building on that foundation of credibility from the government. So really happy to be building in the UK. I'm happy that I ended up here. And I think the environment is very supportive, but I also think that the government's taking a fairly good approach. I think a lot of people in the crypto area are feeling a bit frustrated that things aren't moving faster, but sometimes it's better to be right than to be first. However, I think it's now really time to kick things into high gear, because other people around the world, a lot of the BRICS nations, etc., are really ramping up. And if the UK doesn't want to be left behind, it's time to start moving. But I think the government knows that, and I think we're headed in definitely the right direction.
Yeah, for sure. There's obviously a lot of legwork to go on, and certainly from my perspective as an audience member, if you like, at some of these events, there's a bit of an education piece missing for sure. But what's really exciting me is the different avenues of which the digitalization of finance and assets are going, and of course changing significantly over these months and years to come for sure. What's your thoughts and feelings around the integration of CBDCs and stablecoins, over that sort of 18-month period? And the reason I reiterate to that 18-month kind of guideline is because obviously the research we've done in relation to things like the RTGS new framework systems going live and things like that. How do you see these two elements of finance working, certainly from a public perspective, but also from that business and wholesale perspective as well, in that kind of time frame?
Yeah, I think stablecoins and CBDCs, obviously two very important and the two most talked about types of digital money when we talk about digital fiat. But we shouldn't forget tokenized deposits, which we're starting to hear a lot more about, which I would separate from stablecoins. And I think actually are kind of the keys to unlocking digital finance. When you get the incumbents with all their massive liquidity into a digital format that can be deployed across different distributed ledgers, then we're going to start to see some real changes. And the tokenized deposits, the credit creation that the commercial banks do, a lot of people in the crypto space have a problem with fractional reserve banking, and you can kind of understand why, but it really is what powers our economies and allows us to have, reasonably priced mortgages, etc. So it's quite an important thing. And I think that the shift towards digital currencies will be made with the incumbents coming along for the ride. And we're starting to really see that now, that it's not necessarily just the cypherpunks. There's definitely a place for DeFi, but the mainstream is coming along into digital assets. Now they realize that there's a lot of advantages. And within 18 months, it's a bit tough. That's about the time that the Bank of England will have decided whether or not they want to issue a digital pound. My money is on that they will. And they're kind of building prototypes alongside the design phase to help inform the design phase. But it could be they make the official decision and the thing's already, 3/4 built in 2025. But in a lot of Western countries, I think 18 months is a pretty short time frame, and we won't see too much adoption in that period. In emerging markets, that might be a very different story, that they want to leapfrog the West. They've got stronger desire, more need for these new solutions. Here in the UK, we've already got faster payments, card networks and contactless are everywhere. And they have their drawbacks, but they've got a lot of benefits as well. And we're not desperate for digital money in the same way that other countries might be.
Sure.
That said, we've got Finality, which should be coming online very soon, which is, they wouldn't call themselves a synthetic CBDC, but I think that's broadly what they are, with an omnibus account directly at the Bank of England and settling between institutions on an Ethereum-based ledger. So we've got that. We've got the new RTGS, which isn't in and of itself a digital currency, but they have said that it will integrate with emerging technologies like DLT. So we could see real-time gross settlement at the Bank of England of different distributed ledgers, which is super interesting.
Massive.
I think a lot of this will happen behind the scenes, and a lot of it should happen behind the scenes. That most people today don't care or know what the difference is between cash, commercial bank money, e-money, It's just money. They spend it. It does what they need it to do, and they're happy. And if people have to think, am I spending a stable coin? Which stable coin am I spending? Is this CBDC? Things have gone wrong. And what we want to do is unlock new use cases, unlock utility, make people's lives better, not force them to think about extra things and have cognitive load.
Yeah, that's really a really good point. I guess on the kind of utility aspect, so on that topic, there's a lot of talk around tokenization more recently than ever, and we'll talk about the trade finance side of things in a moment, because obviously, certainly here in the UK, we've had that bill passed into law. Do you have any kind of focal points in the areas of tokenization? So we talk a lot on this channel about that kind of NFT application. I'm not talking about pieces of art and the apes, etc. I'm talking about things like physical assets that can be fractionalized, that can be digitalized, and there's so many opportunities there. Do you have any thoughts on the way tokenization and certainly tokenization of assets, whether that be physical or digital, will not only just increase availability, fractionalization, but potentially boost the economy, and how that works potentially with a new kind of CBDC system within that kind of framework?
Yeah. So before we start this one, I'll say I'm not an expert on tokenization of real world assets or fractionalization, but I don't think that the tech is the bottleneck there now. I think the tech is getting to where it needs to be. And what we do at Millicent is build infrastructure so that other people can build on top of it. And we want to unlock very scalable DLT with that fungible digital money so that people don't have to worry about who's issued what digital token. They know that it's money. And that's a big unlock when it comes to fractionalization of real world assets, is having these different forms of money that you can interact with without having to think too deeply, but knowing that you can have delivery versus payment, smart contracts, escrow, etc. When it comes to fractionalization, for me, there are a lot of non-technical questions. The legal questions might be what's holding things up more than how can we do it. You can divide a house into 1,000 NFTs, but if the council decides they want to tear down your house and put a motorway through it, how do you deal with 1,000 different people who all own a fraction of this house? Do they have to nominate someone, etc.? So I think rather than the tech, there are a lot of societal questions that need to be answered. But that said, I definitely think that it's going to be a massive industry with huge unlocks for accessibility for different kinds of assets, and also liquidity. Highly illiquid assets or highly expensive assets can now be democratized and distributed to everybody more widely. I think it's fantastic. It's so complex. I haven't gone too deep into it because there's so much going on in this industry. Absolutely. When it's your full-time job, it's tough to keep on top of everything.
That's brilliant. I guess leading back to what you mentioned about Millicent Labs and all the different avenues they're going down. One that was quite interesting to me was the TradeFi perspective. Now we know, or most people that watch the channel and those that are very heavily involved or have an interest in this overall space, the digitalization of trade finance, was absolutely huge. And the fact that the UK went from that bill momentum into creating essentially law, that this is actually a possibility in the usage of things like smart contracts, etc., coming into fruition. Where do you see Millicent Labs within that area of things? Because it does link slightly with tokenization, but the staggering numbers out there that we've seen on various documents and research aspects is $1.7 trillion market. Obviously, probably bigger than that as the years go by. But it'd be really interesting to get your thoughts on those areas and what Millicent Labs are kind of touching into, certainly, especially with that TradeFi element.
Yeah. So as I said, our focus was never really on being the application creator. We want to be the infrastructure provider. But for Project Rosalind with the Bank of International Settlements and the Bank of England, they called for use cases. And so we had developed kind of a white label application that we could test out different scenarios on our tech with. And we said, well, let's tweak this and do a really cool trade finance case. Because accessibility and democratization of finance is something that we're really passionate about, especially my co-founder Stella, who came to the UK as a war refugee as a child. And we, with the TradeFi app that we presented for Project Rosalind, it was not just the escrow. So, matching buyers and sellers' needs is quite difficult because what's safe for one is not safe for the other, and you tend to meet in the middle with letters of credit that need to be guaranteed by a bank, and you start to add fees.
Mm-hmm.
And so with a smart contract escrow, we were able to lock that in. But a lot of small and medium enterprises are of growing importance in the international economy, but they can't access trade finance as easily as these big multinationals, and that's where that $1.7 trillion gap comes in. And so what we did with TradeFi that we presented on Project Rosalind was, once that money for the payment is locked in the escrow, the supplier, they know that they're going to get paid, but they might have cash flow issues.
Mm-hmm.
So we introduced a kind of invoice factoring or trade finance marketplace whereby they could sell that locked escrow kind of like you would on eBay. I've got a 99% rating, so my locked £1 million of CBDC should be worth 99p on the pound on the open market.
Mm-hmm.
And so you could sell it like that to an investor who would then pocket a small return when the money comes in, or when the delivery arrives, I should say. And we also added a crowdfunding element so that smaller investors could get involved and fill it up, and an auction for people who are new and maybe didn't have the reputation built up on the website. And so there's a lot of new ways that you can start to think about things, that not necessarily just a more efficient way of doing what used to be done, but sure. but some real innovative twists. But I think the trade finance use case, super interesting. Off the back of Rosalind, we've been approached by a few people about doing some other work in the trade finance sector. We'll have one announcement coming out fairly shortly about some more work on that. And there's some other stuff in the pipeline for a little bit later. So a really exciting sector for us, and something that a lot of people are really interested in.
Well, we're definitely keeping an eye on that for sure. It's great that you mentioned Rosalind, because that was my next kind of question and topic, if you like. So we've covered pretty much most of the projects. I mean, they're constantly evolving, new ones being added through the BIS, Helvetia, Jura, etc., Icebreakers more recently. Rosalind, of course, has wrapped itself up in terms of a pilot, as it were, or indeed the frameworks to be built within it. I know you guys had a massive impact within that as well. Could you talk a bit more about your integration with Rosalind, but also what did you feel stood out in the Rosalind report, which was obviously a couple months ago now, but really interested to know your thoughts on that.
Yeah, we really enjoyed participating in Rosalind because it was an interesting thought experiment by the bank. It wasn't what you might expect. It was really a playground for the private sector, and that's what they wanted to design. And the way that the Rosalind API was set up, you didn't actually know what kind of ledger was behind it. It could have been, they had a Hyperledger Fabric ledger that kind of mimicked a UTXO functionality. And then they had an Ethereum Besu account-based ledger. And unless you asked, from the functionality of calling the API, you didn't know which ledger you were connecting to. And only very limited information gets passed through to the bank. And it's essentially a level playing field for payment interface providers to innovate and build new things. And I thought that was a really interesting way of looking at it, saying we know that we're the central bank and that innovation isn't our gig, and that we want to make this playing field so smaller players can get involved. And they invited, we're a fairly small firm, fairly new. We were invited to play along with some of the world's top 5, top 10 biggest companies. Massive. And it's quite funny being in that same room. And we did pretty well. We were identified as one of the 3 solutions that that the audience were fans of. And yeah, it was really cool. But I think it's kind of like the App Store from the iPhone. When the iPhone came out and they said, "Hey, here's an App Store." At the beginning, we got the beer drinking app and some other weird things that didn't do very much, but nobody really knew how much they wanted apps and how useful a smartphone would be less than a decade later. And that's the kind of innovation I think that Project Rosalind is seeking to replicate, but for money, which is huge.
That's really interesting. Yeah, I think there's some really interesting, new projects coming out as well through the BIS. We're going to follow those absolutely massively closely. But it's really cool to see your insight on it, especially just on the ground, as it were, through that. Really exciting to see those developments as time goes by. Before we go into a bit of detail around like what's next for Millicent, I just wanted to have one last question for your mind. So as I mentioned, we've been looking into the RTGS system. Dates have changed slightly over the last year or so. There's kind of like a rough defined element of November 2025, but with the actual engine being pretty much started up in 2024 sometime, with the utilization of the ISO 20022 standardization as well. Do you think the world is ready for, and it could be a split answer here in terms of the sectors, but do you feel like the world is ready for a public and a private solution, i.e. the CBDC systems, the stablecoins aspect, at that point in time? Or do you think we need more time for like potential education? And how do people actually use these things? Do they even need to know how they work? And it's just exactly, perhaps to your point just a moment ago, is actually we just need to know the end result. It'd be really interesting to know what you think about that.
Yeah, I think in terms of the do you need to know or do people need to know, they should obviously have every right to know. And I think that's something else that the BIS and the Bank of England especially have been really good at, is releasing all these project reports from the BIS innovation hubs. And the Bank of England releases all the minutes from its central bank digital currency forums, and they release calls for evidence and consultation papers. And I think that's really important to help shape these phases. 2025, something new comes online. It probably takes a couple of years to start to get adopted. And we're really still in the early phase. And I think that 2025 is if you know the kind of tech adoption curve, is when we go from that early majority to trying to cross the chasm and get into early adopters to early majority. So we need to cross the chasm and get it to a place where it can be mass adopted. And we're not there yet. In 18 months, we'll be much closer, I think. There's a lot of thought and a lot of effort going into this from some of the world's biggest companies and as well as, smaller startups. And insofar as the public, I think most people don't really have a view. When you're interested in it, it's really easy to have strong opinions one way or the other. But when I talk to my friends who aren't in the industry, they barely know what a CBDC is. They don't really care. Some of the ones that we're seeing move the fastest, like the digital euro, I think maybe have the digital euro is an interesting one. I think they're not pushing for innovation. They're almost doing the opposite, is they want to keep it as vanilla and as safe as possible. And the question there is, what's the incentive for people to use it? Well, it's cheaper for merchants than contactless. Well, I'm not a merchant. It's tapping Apple Pay, which I already have, is easier. Or even so, the ECB did some research and found that merchants actually really like card payments, even though they're expensive, because they know everybody has them.
Yeah.
And, people are quite lazy. We wouldn't have Deliveroo and Uber Eats if price was the only factor. So we need to be really innovative and really clever when we think about ways that this is actually going to benefit the everyday person in their everyday life. Trade finance, sure, that's a great use case and a big one, but it doesn't touch the everyday person who's just going to work, wants to buy something from the shop. And the question is, how much do we start to change those things? So I think that the adoption of digital money in everyday life will come at a slightly slower rate than some people might think, and will probably come with actual changes in society as we move a little bit more online. If we move towards some kind of I'm going to use the term loosely, metaverse, but more online environments, that we'll see, that's when digital money really starts to make a lot of sense. I actually have, sorry, a lot of people don't know this, but Finland had a central bank digital currency in the 90s. This is a card that you could upload with central bank money.
Wow.
And pay with it. And it died because nobody used it, because it's safer isn't better than it's convenient. And so people stopped using it and they used Visa and MasterCard, which is what they were trying to protect against. So I think, wrapping up a long-winded spiel, 2025 is really the turning point when we'll see things kick in to high gear and see the adoption start to begin in earnest. Stable coins, on the other hand, they're already going well. I think that we need to have some kind of standardization in stable coins. The two-tiered monetary system's not going anywhere. I think that you can see right now, 2 stable coins have 90% of the market. I don't think that's healthy. When you compare it to 400 banks, 480 banks in the UK and nearly 5,000 banks in the US that can all print the same money, having money that can't be interchanged is a friction point that I think needs to be solved for it to go mainstream beyond the early tech adopters who love them. And I mean, we pay some of our staff in stable coins. So I'm not anti-stablecoin. I just think that we're on version 1.0 of stable coins, and we need to get further ahead.
Yeah, it is very early. I just remember the last Digital Pound Foundation event, actually, and you guys in the panel was absolutely fantastic. And one thing that reminisces with me is the day it will be all successful is the day there is no more talk about it anymore. It just is what it is. And that's exactly it, isn't it? I think whether that is in 18 months' time, 5 years' time, that there's always going to be education aspects to this. There's going to be chopping and changing of frameworks, regulations, standardizations. But as soon as that point hits, is just being used. There is no talk about it anymore. And if you think of the old financial systems that we've been using for a long, long time now, no one talks about how they work or this, that, and the other. They just use it. So it's really interesting. Yeah, really interesting.
If you make a bank transfer, you don't talk about, oh, I just used faster payments and this is how it works behind the scenes. You just send your friend money. But I think something you just touched on is really important as well, is remembering that these are highly regulated areas. And so tech can move very quickly, but regulation will always be a little bit slower.
Of course.
Especially when it's something systemically important. So it's not just about the tech, it's about getting it all put together.
Absolutely. Kene, I appreciate your time is very precious. I just wanted to pretty much ask you, really, what's next for Millicent Labs? Is there anything exciting that you can share? I know there's some things you mentioned earlier that you can't mention, but really interested to see if there's any developments. And of course, for our audience, it'd be fantastic as well. I'll leave in the description after this video, links to the site, etc. But anything that stands out and things that people could be very interested in whether it's the months or the years ahead. Really interested to know.
Yeah. So I guess I'll leave you with one or two things. So what we're really trying to do at Millicent is bring an application-specific blockchain thesis to life in the institutional sector. So unlike Ethereum, where you have one layer and everybody puts apps on top of it, we believe that one use case for one group of people should have its own blockchain, because you're not going to have people all over the world agree that this is the chain we should be on. If you have too many things that are high demand, like payments, blockchains aren't good enough to process them yet. You can have one blockchain that just does payments, and that's great. But you should be able to put them on top of each other like money Legos. And so we're bringing the Cosmos SDK more into the institutional space. So Ethereum has Besu as the institutional version. we are essentially aiming to be the Besu for Cosmos. And after Ethereum, it's the second most actively developed public blockchain framework. So it's a great piece of kit, fantastic tech. The people who built it, the original kit, Stack, are geniuses. I think the inter-blockchain communication is fantastic. And so that's really what we're trying to do. And insofar as what's coming in the next few months, few weeks actually, unfortunately, can't talk about much of it right now, but we'll have something to talk about in the trade finance space, a proof of concept that we've done with a very big company. We're doing something else with a G20 central bank that we should be able to talk about in a few weeks, maybe a month's time.
Awesome.
And yeah, other than that, we're building and looking forward to what's coming in that next 18 months.
Kene, it's been awesome. You've given them some snippets now, so obviously everyone's going to be all eyes on the site and any other channels that you guys have got as well. As I said, I'll leave those in the description. But Kene, it's been absolutely fantastic to have you on the channel. Again, I'm hopefully looking forward to seeing you on the next panels or at least at the next events. It's absolutely intriguing, fascinating to me. So I really appreciate your time, and I know the audience is going to love this as well. And hopefully we'll get you back on the channel very soon.
Yeah, I'd love to come back. Thanks so much for having me, and take care, Simon.
Thanks, Kene. Speak soon.